Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the dollar fade back a bit here. We're actually seeing the euro work higher. We did do our analysis. If you had a chance to review them for the basic tactical, pretty much covered all the pairs that we review, and we'll go on and get to that in a few moments. But as you can see here, the Euro's making a bit of a run up in here. And we've talked about the importance of that 1340 close. Now we're looking at it here on the daily, but on the 2 hour, we do also have some thoughts on where this market can go to. And also seeing here, cable staying pretty steady up here at these upper levels. I think that has a possibility of moving higher. And gold also in its own right holding up very well here despite the move we've seen here in the S&Ps. Dollar Yen's just hanging around here, although it hasn't responded to the continued run up in the equities, but that may be in part obviously due to the fall in yields. So we're going to get to the news and then we'll go on and jump right into the analysis. It says morning bid, May sees key to the Brexit deal in Belfast. Vowing to save her Brexit deal, Prime Minister Theresa May calculates that the way to win over skeptical, hard Brexiters leads through Belfast. She'll be spending as much of the day seeking to persuade the small Northern Irish DUP party that the province will remain immutably part of the UK, even as its post-Brexit border with Ireland stays invisible. If she can do that, her bet is that she can win over the bulk of the Conservative lawmakers who rejected her deal last time, and perhaps some Labour leaders too. She needs to persuade a total of 75 to change their mind. If she can do that, we expect to vote on Tuesday. Emmanuel Macron's government has conceded that security arrangements were not up to the job of protecting Champs-Élysées shops and restaurants from the major ransacking on Saturday as yellow vest protests once again descended into rioting. His prime minister is due to present the new security measures today amid preventing repeat incidents. Paris Socialist mayor is furious at the failings of authorities and has demanded the government explain itself. Macron has been looking to put the worst part of the yellow vest impact on his poll ratings behind him. He may be on shaky ground again after the weekend. And moving on to the markets, a warm glow surrounding this week's Federal Reserve policy meeting already seems to be lifting world markets with a winking confirmation of the long-mooted merger talks between German banking giants Deutsche and Commerzbank. The other big factors first thing Monday, the MSCI's All-Country World Index nudged up to yet another 5-month high early on Monday, with Shanghai stocks gaining more than 2% to lead the way after major U.S. indices closed out their best week of the year on Friday. Hong Kong, Tokyo, and Seoul were all higher, with gains ranked in that order, undermined by what last week's poor U.S. manufacturing numbers imply for Fed decisions. The dollar index was down 0.2, with the euro dollar pushing its highest in almost 2 weeks at 13.49. 10-year U.S. Treasury yield steadied after Friday's drop to 2-month lows, but remains stuck below 2.60%. The Fed is expected to underline on Wednesday its patient pause by reducing its dot plot interest rate forecast to show no change in rates for the rest of the year. Futures markets were already starting to price in the chances of a 2019 rate cut. Fed is also expected to detail the end of its balance sheet rundown this year, with many Fed officials uneasy that the impact of this process on financial liquidity may cut across the more dovish policy signals. Alien European banks will get a shot in the arm from the Deutsche Commerzbank merger talks, while labor unions warn of job cuts of 20,000, and some analysts say it may cut across Deutsche Bank's internal restructuring program. Combined with would make it the Eurozone's second biggest bank by assets, behind BNP Paribas. Deutsche Bank shares were up 3% first thing, and Commerzbank's were up 4%. More broadly, there was some rekindled optimism about the incoming European economic numbers. Eurozone surprises are now less negative than those than the United States for the first time in 6 months, and more than half of January's negative trough in readings. Morgan Stanley's weekend strategy noted highlighted the potential turn in Eurozone businesses. Confidence at bottoms in this series typically presage a 9% gain in Eurozone equities over the following 6 months. And on to Canada's weekly dollar gains as oil falls, closing out from Friday. The Bank of Canada is unlikely to cut interest rates to support a flagging economy as long as job growth continues at a robust pace. You know, we saw very good job numbers on that. Canadian home sales tumbled 9.1% on Friday from the previous month to hit their lowest level since November of 2012. But separate statistics, Canada showed that the factory sales were up 1% in January from February. On to the Aussie dollar, a 2-week top. Kiwi rises on easy Fed bets. The Australian dollar and New Zealand dollars rose on Monday for a second straight session as the greenback eased on bets the U.S. Federal Reserve would keep policy accommodative at its policy meeting this week. Monday's gains come amid talk Fed policymakers will lower their interest rate forecast of dot plots to show the little or no further tightening this year. Also expected a more detailed plan on stop cutting the Fed's holdings of nearly $3.8 trillion in bonds. Expectations for a continuation of the pause policy, but all dialogue will be closely monitored as usual and expect some gyrations in the market around the event, said Nick Twiddale. Aussie's been unable to break its 70 to 72 cents US cents trading range are almost seen most of the year, with the currency suggesting a dovish tilt from the RBA. The RBA has left policy at record low 1.5% since easing in August of 2016, and last month shifted from its long-held tightening bias to put rate cuts back on the table. Minutes of the RBA meeting are due on Tuesday and could provide further clues on the central bank's thinking. Financial markets are expected to cut as soon as August, led by deep property market downturn, although the RBA has appeared sanguine about the economic outlook. And lastly, let's go on to the Aussie leads the recovery as hopes for accommodated Fed. The Australian dollar hit a 2-week high as it led recovery against the U.S. currency on Monday, as caution about the U.S. economy and expectations for an accommodated Fed meeting this week kept the greenback on the back foot. The euro was also a beneficiary from the weaker dollar at 13.47. Markets are expecting the Fed to strike a dovish tone when it meets this week, and bets for an interest rate cut have risen after the weaker than expected manufacturing data on Friday. The market is probably expecting some downshift in the dot plots, which currently sees 2 hikes in 2019 and 1 in 2020, plus more discussion on the end of the quantitative tightening, i.e. stopping its balance sheet reduction. This should maintain a positive environment for risk, ING analyst said. We do think the dollar can hold its own against the lower yieldos. The current lower volatility environment plus decreasing headwinds should be positive for high yield and EMFX in general. The Japanese yen was little moved at 11.52. Sterling slipped back to 32.78, but was not far from last week's 9-month high of 33.80. Supported by the belief of a no-deal Brexit could be averted and an extension of Britain's departure from the European Union requested. Prime Minister May is trying to convince lawmakers to back her twice-rejected Brexit deal in a positive vote in British government parliament this week, although 2 government ministers said on Sunday there may not be a vote unless they can be sure of getting the deal approved. May could hold a third vote on her agreement on Tuesday or Wednesday. Commerce Bank analyst said a vote on Tuesday would constitute a signal she considers the possibility their deal will be accepted. Admittedly, her views were wrong on so often in the past that would necessarily constitute a strong GBP positive signal, but it should have no doubt have moderately positive effect on the British currency. So let's go on and move in to the analysis, and as you can see, the calendar is fairly light. We do have Canadian securities. That's probably going to be a non-mover. We do have at 10 a.m. the NHB housing market index here in the States. But other than that, it's going to be a relatively quiet morning. And let's go and move into the analysis and go right with the euro. Okay, it says the euro has been unable to take out the 1340 on a closing basis. A break above on the close will target 1413. Support is 1292 with secondary support at 1269. So let's go and move into the euro. And this has been key right here, this 1340. And we've had, these three tries here, and they've each come up short. But things are starting to turn a little bit here for the euro. And if we do get this daily close above 1340, and I think there's a good chance today we can, that will set up a run to 1413. I think that's where we'll go to before you see the market pause. Doesn't mean it can't move higher, and it can. And let's go and move into the 2 hour, which I think is interesting. So I had some thoughts here, and that's why I brought up have the 2 hour in focus. You can see we've been on this trend line here. Now our target. Remember last week, early last week, we're looking for this 1322. I thought that's what we're going to get to. 30. Actually, our target we had is 1327, which it got there. And 1322 was the 38% of this entire move of 1176 to 1569. 1327, which was our target, was a move from 1176 right up here to, was it 1419 or so? And we got there. And when we got there, that was the area we were looking for the market to get to. But, we didn't get much of a pullback at all. I mean, you got a little bit of a pullback, but not much. So the reason I left this here is if that happens, and let's say we get to a 38%, generally you're going to make another run now to the 50%. And that's where we should go to, which is actually going to go on a confluence here, or not too far above, this key downtrend line. Now, my thoughts were, because we had already hit it 3 different times, I think the market will make this run up in here, maybe come up around. Remember, we talked before about that 1369 being key, and we got 1372. Well, 1369 is key, but I think we can make that run to that 1372, and it'll be just above here. Now, we may end up pulling back here at 1359-ish, but this market really does have the opportunity to move a little bit higher, I believe, overall, and we'll get to that. Let's go on and start here with this is still going to stay the same, although I'll just move this to 1372. The key will be, do we close above the daily key area of 1340? And I think we will. I think we'll make this run to 1372, which is going to be the 50%. My thinking is, if we do get past here, I think that there's a pretty good chance we'll make a run eventually closer toward 15. And my thoughts being on that is, as I said, we came up to the 38% and we didn't even pull back very much at all. That wasn't very much of a correction. Now, if we would have seen it come down to, let's say, the 1260, or at least right around this 1270-ish area, then I thought, okay, then we would have seen a little bit of correction. We'll see if we can bump along here. But we barely pulled back. So this thing still has continued further momentum. And I think that we'll make this run to 1372. They may pause just a little bit, but I think that we'll end up getting beyond that and making this move much higher. But I think what may happen is, I think the market can actually make it close all the way up to about 1470 before there's some type of a pause here. That's going to come in right there, 1473. And then we may pull back from there and we can still move higher. And my thoughts were, and obviously now we'll get in the news, thought, okay, the Fed may be doing this, they may be doing that. And my thoughts being there before I even saw that news is they're going to find, once we get past here, they're going to find a reason why they're going to knock the dollar. I just don't believe that. And now they're already talking about, okay, well, and now I think we're going to have that catalyst here as to why they would knock the dollar, because they're already looking for the Fed to going to ease back on its dot plot strategy. And then also the issue, they're looking about the issue regarding the balance sheet. You can really, you'll have now a catalyst, but if you get beyond here, and I think we will break beyond here, we may be hanging around here, I think you can quickly make that move. And I already have this talking about, which we did here on the analysis. We're looking for a move up here to, we'll target 1413. Okay, so we're looking for a eventual move to 1413. But with that, on that day, I think you could really take a run if that plays out, and we'll make this run up here to 1473. And I don't think that'll be the stop of it. I think that it'll start to move higher, but it's going to be more about the dollar losing its steam. I think that then you'll start seeing all these excuses as to why the dollar has gone so far. It doesn't have any momentum, this and that. But I think it'll kind of feed on itself. That's my perspective. But I think, like I said, that the idea that we didn't even pull back very much from the 38%. If you think about it, we didn't pull back. All we did was just kind of stall and just ease back a bit. And here we are reasserting ourselves. So I think we'll make it up here to 1372. And the key will be if we close above 1340, which I believe we will. This was a little bit of resistance in here. If they pop up, we might see a little bit of a pause, but I would not want to be short this market because I think it is setting itself up for a longer move higher. I think more of it has to do with the dollar and the Fed itself than opposed to the euro, although you can see here that the perspective or the tone that they're looking at, I'm trying to think of the right word, but now the outlook is starting to shift. Instead of the glass being half empty, now it's starting to come to the glass being half full. Okay, now all of a sudden, the numbers aren't so bad. You know what? They're really starting to improve. And when you look at other things about the euro, now we're seeing here that the economic data is coming out less weakish. If it's a surprise where it's not as bad, and that the numbers coming out of the U.S. If you think about it, if you even those up against this euro, they're actually, the euro part's coming out better. So they're laying the groundwork. That's what I'm saying, is you're starting to see, like I said, more importantly than that, it's just basically shifting from a glass half empty to a glass half full. If you look in that perspective and you're seeing that tone, the way they're laying the table out, well, things aren't so bad. You know what? They were bad, but they could have been worse. And you know what? When you look at the U.S., it's starting to underperform its numbers when compared to Europe. You're already seeing that laid out. Now, whether you believe that or not, whether you believe the euro is destined to go to 108, it doesn't matter at this point. It's what the market perceives things to be. And it sees its own, direction in this case, saying, hey, you know what? Now we're going to have a catalyst, which would be the Fed meeting. So I think, like I said, I'm not thinking we're going to go to Venus or anything like that, but I think we could still make a run back up here to this 15. And I think actually, before you see a real pronounced pullback, I think this is why I put these lines here. I think we can make it to 1530. And I wasn't even thinking about the Fed on Sunday. I was just doing a little bit of extra work here. And looking at the technicals, that's it, just the straight up technicals. You've got a pretty good trend. If it busts above that, and what would be the catalyst? Well, now we have a catalyst. It'd be the Fed meeting. But I think we didn't get a pullback. All we did was sputter here at the 38%. So that suggests we'll make it to the 50%. I had this marked off as 38%. Let me just adjust this. Guess I left that there because one of the reasons I left this here to 38% was to basically show here, hey, look, we did make it to 38%. And we didn't do a whole heck of a lot. All we did was just sputter. We didn't pull back, so that suggests we'll make that move up here to 50%. So I'm basically laying the case where we'll eventually go. We do think that if we do get a close above 1340, that we will make a move to 1413. I think that's what we'll go to, but I think we'll make it up to this 50%. I would think before even the Fed meeting, and then from there we may just be hanging around here, and then all of a sudden I would not be the short the euro in that particular situation. I think it's more about the dollar and the outlook of the Fed than actually the euro. But you know, the dollar index comprises 56.4% of the euro comprises 56.4% of the dollar index. So, you know, one trades, you know, inversely, I should say, to the other. Now, as far as support, well, let's go and take a look at this. We spent some pretty decent time looking at that, and I think it is important. Support now is going to come in here. Let's go with 1317 followed by 1293. So it's really 1317. We'll keep it fairly tight here. We'll call it 1316. I think if he moves to there, they're going to defend that. So if you see a pullback, I don't think it will last too long. So let's go move into cable. Cable appears destined to march higher. Data has been positive, and Brexit concerns are losing their effect. An upside breakout has an initial target of 35.19, followed by 36.14, or should have been saying confluence. Well, followed by 36.14, which is 61% of this 23.77 to 43.78 confluence with the level 36.07. Support is 31.78, followed by 31.28. So let's go and take a look at the cable. Well, we read the news, and May's in Ireland, and the thought is if she can get her backing, she'll even call a vote on Tuesday. They said, well, you know what, she's been wrong in the past, but if she does have that backing, then if she believes she has that backing of 75 members, then yeah, don't wait till Wednesday to put it off. So if she calls that vote on Tuesday, although they said she'd been wrong in the past, could obviously see a pretty decent little bit here in the cable, and it really seems to be just itching to want to go higher. It really does. So, well, here where we stand here, we mentioned on here that support comes in at 31.78, followed by 31.28. So let's take a look on the 2-hour. There's the old stalwart, 31.58, but we're looking right in here. Now we're looking at right there. Let's go there. There's the 31.78. I don't think it'd make it all the way back to 31.58. So if we see that slide, well, resistance is going to come in right there, 33.53. But here's the key here. This is the breakout area here. So we'll go with 33.05 for resistance today. And you know that 33.74 is that key daily close. This one I remember when we made that run up in there. And look at that. And that key daily close was right there at 74. I did miss that opportunity. I didn't see it until someone mentioned, well, cable. And by that time, it was already, I think it already hit up there, and it was already like at 33.52 or something like that. I'm like, or maybe it was in the 40s. I'm thinking, well, God, now I've got to add on to that as far as what would possibly be if we popped up even higher. So I had missed the possibility going short, and then we saw a pretty good, decent little dip from there. But that's where we stand here with the cable, but it certainly looks like it's poised to go higher. And as I mentioned, we had some positive news last week, economic news, and unlike the euro, where now they have to look at the glass half empty, saying, well, it could have been worse. Well, with the cable, we are actually getting positive news that continues to keep, popping back out. So you really actually have real true groundwork laid where this thing can move higher. And once again, if on the backdrop of dollar slide, it almost be a self-perpetuating, or it's just going to be one right after the other. The cable is strengthening, the dollar is going to be weakening on its own. It's just this thing could really get moving. And that's what I'm saying. We do get that breakout. We're going to go to 35.19, and then beyond that, 36.19 confluence in here with 36.07. So I think we could really see a pretty good dollar low pullback post-Fed. FOMC, I should say. So let's go move into the Aussie. Well, the Aussie has stabilized after testing the level 70.27. Remember, we had that from 2 weeks ago, and we finally did make it down there. They shot down a little bit beyond that, but we were looking for that as an area for the market to get to eventually. This appears only a pause in a downturn. Upside resistance is 71.30 with support at 70.27. Hang on. 71.30. There we go. You can see it right there. We can actually just draw this out. Make it simple. So that's going to be 71.30 right there. That's going to be the resistance that we're looking at. And that'd be pretty cute if we can get above that on the closing basis. Good. On the 2 hour, this resistance comes in at 71.42. That's been that key level from before. On the pullback, well, we're certainly doing a little bit stronger than we did before, so we'll actually go with support here at 70.52. Probably leaving a little bit stronger than that, to be quite honest with you. That's a little bit too far away, so we'll go right there, 70.68. Now looking here at the dollar Swiss, well, we're starting to see the dollar pull back further, so I think we have to look for a little bit continued move lower. We're at par 11. I think we have to look for a move down all the way down here to 99.41. There'll be some little bit of support here 99.72. For today, we can go with this 99.72, but I think this is where we're going to go to on the short-term basis, 99.43. But that's a pretty good pullback, and we're talking well in excess of 50. We're talking like 60, 70 pips, and I think that's to say that's the support. We really have to see this thing come off quite a bit. Not saying that it can't, but we'll say, and I think it will. But at least for today, we'll just go with the support here at 99.72. But my thought is we're going to go to 99.41. Resistance right there, par 48. With that, let's go and move into the dollar CAD. Dollar CAD has taken a respite after a strong run. The pair needs a daily close above 33.54 to generate an upside run. With the dollar on the defensive, only a correction in crude will fill the bill for disappointed bulls. Initial support is 33.10, followed by 32.56. So let's take a look at the dollar CAD. Well, and people were really disappointed to not see this thing, move higher. And we certainly saw a little bit of a long-legged doji. Let's say it's not long-legged doji; it's like a medium-legged doji. So generally, bulls don't have control, bears don't have control. It's not that long of a wick, but generally you'll see a pause, which usually mean whatever the prevailing direction is, you go a little bit higher. But the only thing that's going to be helping this is if we can get crude to pair back. And we are pairing back a little bit, but I think we're going to have some type of an event to go and get this crude to move lower. So we said right now, keeping it fairly simple, support comes in at 33.10, followed by 32.56. We'll see what crude does, but like I said, we're just not seeing this pickup. And then on top of that, it's certainly not going to help that the dollar's a bit on the defensive at this point. So we'll stick with our 33.10 here. And we'll move into the 2-hour chart to get, and we do need that close above 33.54. Resistance is going to come in right there at 33.66. Actually, that's the number I was given the other day when I was in the room and we were making that run up there. I didn't take a short against it, but I put in the room that I thought I was looking for us to run out of gas at 33.66. We ticked up a little bit higher, and then it took a while. They hung around that 66 or 64 for quite some time before they finally gave up, and then they actually found some momentum. I think someone posted this story. I think Blake mentioned that Citibank was looking for a lower move or something like that. And that got the momentum moving lower. But that 33.66 is right there. And that's going to, and I posted that in the chat room, that's going to be our resistance for today, 33.66. Still remains bullish overall, but we need that close. It's important. We need that daily close above 54. Then we can get some further upside momentum. Let's go into the dollar peso. Well, this is an interesting chart, and we've really, bulls are definitely can't be too happy about the outlook of this. And the dollar peso broke key weekly closing weekly support at 1924.66. Pair found bids at the support level of 1918. The pair will be on the defensive, but good volume of a volume level between 1915 to 1920. Fibonacci confluence comes at 1915.3, the 78% of 1902 to 1962, and 1915.7, the 161%, along with support level 1914.9. Resistance comes in at 1924.5, followed by 1928. So a lot of numbers, throwing a lot of numbers at you. Let's take a look at the chart and see if we can't wrap our heads around that. All these numbers that popped out. Well, what I was suggesting here is, and we did break some key weekly support here on the peso, and and I don't think that's saying too much. Probably don't need to show you that, considering that the market looks in pretty tough shape. My key thing was that that's not going to go away after you click that, after you broke that support. Now we'll probably find some nice volume coming in between 15 and 20, but this market is going to continue to remain under pressure after breaking that key weekly support. But we're coming into a little bit of value here between 15 and 20. We did find support right here, and I actually had that level already popped off, and I actually missed it in coming in for just a little bit of a scalp buy. But I had this marked off, and I didn't have my alarm on it. I missed this. I mean, it popped up. It didn't pop up a huge amount, but it did pop up. But anyway, that being said, I think that we will be a little bit under pressure. The market's going to come down here. They should be able to test this lower area here and put further pressure. Now, we do have some nice confluences come in. 1915.3 is the 78% of the move down here to 1902. Okay, we'll take a look at that. You can see that there's a 78%. Okay, so that gives them a target to go to. And then 1915.7 is the 161% of this area from 1924. So we'll go here, the low, to the return high. You see that? And that's 161%. And I think that's important when you think of, look how far we fell. Okay, we had quite the fall. So we finally recovered, and the run back up wasn't a whole lot or nothing to write home about. You look at this right here. You see that? So 161% comes in. So you got a beautiful confluence coming in here. That, along with this demand level coming across 1914.9. So I think in time, we should probably make it down here before all said and done. Now, there's a little bit of support coming in just below there at 1917.0, okay, 1917.0. We'll actually use that as our support for this morning, 1917.0. But I think we'll be eventually getting down here to 1915. Resistance comes in at 1924.5. That seems like a pretty high run up, but market's pretty oversold. And if they do pop it, let's say Crude's already on the defense, so we pop it up a little bit. Yeah, you can make that run up in here, and you see it right there, 1924.5. Now let's get rid of this. There we go. But like I said, I think we'll be making a move down here. This almost like it worked like a magnet. Got a, it's kind of like a triple confluence. You got a good level here, demand level coming at 1915. And this is the bottom of our value zone, we believe, which is 15 to 1920. Then we got the 78% of this entire move. And we have the 161% of the bottom of this move, and then the very weak rally back. Triple confluence right there. But our support's going to come in today on a short-term basis, 1917. And this should be 19. There we go. Let's move into crude. This market's easing back a bit, but boy, has it been strong as can be. Crude resistance remains the same as Friday, 58.96. Crude is stretched, but has resiliency at these premium levels. Support comes in at 57.86, followed by 57.29. An equity slide may be the only event that can put a dent in crude. So we'll go with 57.86. We're looking for our first area of support. And we said 58.96 remains resistance. Well, on a short-term basis, obviously we're starting out a little bit weaker. Market might be thinking, whoa, we got a little bit ahead of ourselves. So like that. It's going to be 58.55. 58.55 for support, resistance. Overall, I like this number, but right now we are a little bit on the defensive, so it'll have to get past this. So 58.55 to launch that. So for right now, considering the slight pullback, but crude has remained resilient, no doubt about that. Still bullish. Let's move into the dollar yen. The dollar yen continues to flirt with 1187. Despite SPOOs pushing higher, this pair is not going along for the ride due to U.S. yields paring back. If equities pull back for a move to look for a move to 1034 for starters, with an eventual challenge of 927 to pivot. The pair would need a daily close above resistance 1224 for upside momentum. Initial support is 1124. So let's take a look at the dollar yen. Well, here's that 1187. So as I said, they've been flirting with this 1187, but they haven't been able to find any takers above that of any real consequence. Okay, so this is going to be our resistance. That'll be it. 1187. I'll go move into the 2-hour chart. And that is, as they say, where the rubber meets the road. Actually, a number I gave that, if you remember a few days back, we had that as our resistance coming into the BOJ. For that day, it was 1187. So, and we still have it there. Look at that. Actually, we've kept it there. So nothing changed. It's going to still stay at 1187. The only difference is we're going to put the support at 1124. I remember that 1124 very well. I had that here, and I think, I don't know if it was the last, I don't know what if it was BOJ minutes or whatever, but we were doing that dip at the time, and I remember trying to catch it, and I put my level at 1124, and I'll be doggone if the low was, I think it was 1126, and then we saw a nice little rally back from there. So that's a very important level, 1124. Obviously impacted with these lower yields. So despite the moves that we're seeing in the equity market, has not made a difference. That being said, here's that 28.25 we've been talking about. And I'll be doggone, I would have thought this would have held it in check. Now, we're still, I mean, we're not very much above it, but this is a huge level, 28.25. Oh, I mean, they had the witching and all that stuff. They kept that bid, but I really do think we're going to stall in this area right here. That's a really tough level to get beyond. Look how important that 28.25 has been. If this market finally pares back a bit, then and that could happen after the Fed, because if they, which you could maybe see a little bit of a rally in the SPOOs, because if the Fed suggests they're going to stay on pause, and then the thought is, oh, you know what, the economy is slowing down, then people are going to say, well, how much further juice can I get from here? And then you may start to see this market pare back. And if that happens, then look out for the yen, because as I said, we'll be looking for 1034 for starters before we get down to the pivot down here. See the pivot at 927. But we'd be looking for starters for 1034 before a test of the pivot. So keep an eye on this equity side. This equity side gets going. Boy, this dollar yen has not been able to follow the equities up. Now, yes, we've got lower yields, but even before then, remember, those yields didn't start falling immediately. They've been having some tough times. But look, how about when we're up in here and the SPOOs are going higher and the dollar yen still couldn't move higher? So if this equity market does pare back, watch out. This dollar yen is going to slide like nobody's business. Let's go and move into the Aussie Yen. The Aussie Yen is struggling with its challenge of the 79 level, evidenced by the gravestone doji on the daily close. Resistance comes in at 79.37, confluence with 79.37 being the 78% of 77.73 to 79.81. Support is 78.62, followed by secondary support at 78.30 79.36. So let's go and take a look at the Aussie Yen, see if we can put all those numbers together. Well, these moves are just up, and away. Oh, well, doggone. I didn't even see that. Look where we just went to. Doggone it. I got up late this morning. Holy smokes. We got there. That's a good area. There's my 79.37. And 79.37 is a 78% of this move. Remember, that was key weekly close here, but you can see we're pairing back. Doggone, I didn't even see that. Well, maybe someone caught it. Maybe some of y'all caught it if you saw the basic technical analysis. I posted it early yesterday. But yeah, that was a target area for them to get to, 79.37. So there's our resistance. Resistance comes in at 79.37. Confluence was 79.37 to 78%. So there we go. Dang, I would have liked to grab that. Holy smokes. Okay, support's going to come in right there at 78.92 on the short run here. I'll actually move just a hair bit lower here. I'll show you. It's going to be 78.87. And let's go move into the cash dollar index. Dollar index continues its pullback with a target of 96.08, 2 hours confluencing with 95.05 to 61%. Limit right here. Resistance comes in at 96.92 with secondary resistance at 97.11. So let's move into that. I put in 95.05, but it's 96.05, and you can see that here. Let's move into the 2-hour chart, which is what we've been using lately for the 2-hour, for the dollar index. And you can see here 96.05. I'm not putting that much stock in this trend line. The only reason I did go and put that here was because this was a pretty decent little pullback right here. Look at that. After a pretty good run here, and then look at this run here. So yeah, I thought, you know what, we'll put it here, although I think that we're going to move to 96.08, which is confluencing here with 96.05 being the 61% of this move back. All the way back here, 95.03 to here. We'll show you on the fib. You can see right there, 61%. Right, there you go. So you got some good confluence there. I think that's where we're going to be going. Now, for today, well, I think that's where we're going, but support would come in right there at 96.26. Resistance on a short-term basis comes in right there, 96.78. And moving into gold. Gold is holding up very well in light of the continued upside move in equities. The dollar pullback has aided the bid, but the market lacking punch considering the fall in rates. Upside resistance remains at 1314, confluence with 1314 to 50%. Remember, we've been looking for that. Support is 1293 followed by 1284. So I think gold has held up very well when you think about where equities are at. That being said, I think it's a little bit disappointing that we haven't moved higher if you think about where yields are at now. But like I said, I think we can make a move up here to this 1314, which you've got this level here, but that's also the 50% of this move back. Okay, we've covered that previously. So it's going to be right here at 1314, and resistance support, initial support will be 1293. Pretty straightforward. And that's remained the same, 1314. We're going to move into the bunds. Well, really no changes here. 66.16. Actually, I don't know why we have 66.45. Must have messed up there. It's still here, that key area here. You see that right there, 66.17. Probably from this move here, but that'll be the support right now. With resistance coming in right there, 66.59. 66.59. Be careful with these because things are starting to turn about the perception of the Eurozone, so be careful with that. And we'll move into the DAX. Unbelievable that we're still pushing up higher here. Well, that would be resistance up here if we make it up there. We might see it on Fed Day. Right there, hard to tell it, but it's 11,729. I actually did pop up in there. So it's going to be 11,729. And support, keeping it simple right there at the technical level, 11,652. Look at the euro still pushing up at 1350 now. And I do think we're going to get to, as I told you, 1372 is a show it right in here. It's going to be the 50% retracement. And this is a very key technical, key trend line right here. I think that we get that daily close above this key 1340. And you know how 1340 has been key. That will launch us to 1413. We might have to get past Fed day, but I think we'll get to 1413. We really actually have the potential, as we showed in the 2-hour chart, to really make a move eventually. I believe it's to 1537. But time will tell. We'll get there. But this is where I think we can get to, potentially, 1531. But you can see how everything, the perception of the Eurozone is starting to change now. Now they're saying, just in closing, oh, you know what, these economic numbers are not so bad after all. You know what, they're less disappointing than we would have thought. Once again, the glass is shifting from, the perception is shifting from the glass half empty to the glass half full. And then the thought being now, well, the U.S. numbers they're still good, but you know what? When you compare it to the Eurozone numbers, we're seeing more disappointment with the U.S. numbers to the downside, as opposed to disappointment in the Eurozone numbers. They're actually coming up a little bit higher than they could be more disappointing. So now that perception is changing. You're laying that out. So whether you believe that or not, this is how the market's viewing it. And the technicals are matching up with that too. Anyway, that's all we've got for today. I'll get the bias chart posted, and good luck trading. Thanks for joining us here on the European Crossover webinar.